Hey there! Welcome to our awesome video about financial freedom in the Forex market. We're breaking down the GBP USD daily chart using a quarterly time-based structure, along with major support and resistance zones. This approach helps us understand the broader market trend and identify where key institutional buying and selling is happening. Let's begin by examining the last 3 quarters of price action. In the fourth quarter of 2024, GBP USD was in a clear downtrend. The pair continued to form lower highs and lower lows, reflecting consistent bearish sentiment. During this period, price reached a major support zone between 1.22100 and 1.2200, highlighted on our chart with a deep purple rectangle. This zone acted as a strong demand level where price sharply rejected downward pressure multiple times, indicating that institutional buyers were likely stepping in. This base laid the foundation for a potential reversal heading into the new year. As we entered the first quarter of 2025, the market began to shift. GBP USD started forming higher lows, which is a classic signal that the downtrend was losing strength. In late February and March, price broke above the previously strong resistance zone at 1.2450 to 1.2500. This area had acted as both support and resistance in the past, making it a classic flip zone. The breakout from this level was clean and strong, signaling a possible trend reversal and attracting momentum traders. It was clear from this breakout that bulls had regained control, and the market was transitioning from bearish to bullish territory. Moving into the second quarter of 2025, GBP USD entered a strong impulsive rally. This was one of the cleanest bullish trends visible on this chart. The pair surged from the 1.2500 zone and rallied all the way up to a swing high near 1.37888. During this leg, minor pullbacks were quickly bought up, and previous resistance levels held firmly as new support. This confirmed the strength of the uptrend. Buyers were in full control throughout this period, and there were multiple opportunities to enter. On retracements toward key demand levels, each higher high and higher low further solidified the bullish structure. Now, as we step into the third quarter of 2025, we're seeing a natural retracement phase. After reaching the 1.37888 high, GBP USD began to pull back, testing the previous key support zone around 1.3200 to 1.3250. This level, which had acted as a breakout point back in April, is now being retested. The market often retests such zones to confirm their strength before continuing in the same direction. At this moment, we're at a critical decision point. If price shows strong bullish reaction here, such as a bullish engulfing candle or a pin bar rejecting the lower side, it would suggest that buyers are defending this level and we could potentially see the next leg up. However, if this zone fails to hold, the next major support lies around 1.24972, which was the key flip zone from earlier in the year. The structure of this chart gives us an excellent example of how quarterly breakdowns and horizontal zones can help us identify institutional levels, trend shifts, and trading opportunities. We've seen a full market cycle here, from a downtrend and accumulation phase to breakout and rally, and now a retracement phase. Such detailed analysis allows traders to anticipate moves rather than react emotionally. If you're using this strategy in your own trading, remember to always confirm these zones with price action, volume, and confluences like trend lines or indicators. Now, let's zoom in to the 4-hour time frame to get a closer look at how price has been reacting within those same major zones we highlighted on the daily chart. When we analyze the H4 chart, we can observe more granular price action behavior, such as internal breakouts, retests, liquidity grabs, and precise market structure shifts that often go unnoticed on the higher time frames. Looking at the first quarter of 2025 on this chart, we can clearly see how price began building bullish momentum after finding strong support around the 1.2100 zone. The H4 candles in mid-January and early February show multiple rejections from this low-demand zone, forming a classic double-bottom structure. As the quarter progressed, we noticed that price began forming higher lows and eventually broke above the 1.2450, 1.2500 resistance level. This breakout is significant, not just because of the break itself, but also due to how price cleanly retested this zone on lower time frames before continuing upward. That clean break and retest pattern confirms institutional support and provides textbook bullish continuation setups. Entering Q2 2025, the bullish trend accelerated with strong impulse legs and tight consolidation ranges, a clear indication of controlled, smart, money-driven momentum. We can also see how every minor pullback respected previous support zones, with no major structure breaks on the 4-hour until late June. The rally continued with precision, climbing all the way to the high near 1.3788, a zone that had not been tested in several months. However, once price tapped this high, it started to pull back rapidly, breaking multiple intraday support levels and shifting the internal structure to bearish. Now moving into the current quarter, Q3 2025, GBP USD has retraced significantly and is now testing the 1.3200, 1.3250 zone. On the H4 time frame, this level is extremely critical. We can see how it acted as strong resistance during Q1 and early Q2, and now price is retesting it as support. The way price reacted here is telling: a sharp bearish drop into the zone, followed by a quick rejection wick and sideways consolidation. This could be a signal that buyers are preparing to defend this level again. However, the market remains in correction mode, and if this level is broken with high volume, the next demand zone to watch is the 1.24972 level, previously respected multiple times both on H4 and daily time frames. Also, notice the liquidity behavior around these zones. On the 4-hour, price tends to sweep local highs or lows before making decisive moves. These liquidity grabs, followed by sharp reversals or continuations, are perfect clues to spot institutional footprints in the market. This is especially useful for intraday traders who rely on entries from minor structure breaks or fair value gaps. To summarize, the H4 chart gives us a detailed X-ray into the health of the current retracement. The bullish trend from Q1 and Q2 still holds on the higher time frame, but this H4 correction phase needs close monitoring. If we see a strong bullish engulfing pattern or a shift in internal structure here, that could be the confirmation needed to go long again. On the other hand, a strong break below 1.3200 could open the door toward 1.2500 or even lower. In either case, having these higher time frame zones aligned with lower time frame confirmation is the most powerful trading strategy. And that wraps up our multi-time frame breakdown of GBP USD using quarterly structure and institutional price zones. If this video gave you value, don't forget to like, comment, and subscribe to Financial Freedom FX. We post advanced trading breakdowns, real chart examples, and smart money concepts every week to help you become a consistently profitable trader. You can also join our Telegram channel and Instagram for real-time updates and setups. Thanks for watching, and until next time, trade smart and stay disciplined.